Rishi Vora, Vice President, Kotak Institutional Equities joins us now. Let's connect with him to understand that what's happening to the auto space and how things are moving in the sector. So Rishi, good morning. Thank you for joining us. Auto is emerging to be the sector of the year. At this current juncture, how do you think the risk-reward ratio is stacked up?
Over the last 2 months, auto sector, or let's say over the last 1 quarter, auto sector has seen a decent rally. And to that extent, valuations of most of the companies which we cover, are above the average levels. Most of the recent optimism that has come in the auto sector is predominantly on account of correction in the commodity prices, given the weak economic outlook from China.
Okay. Is it, I think we lost him there, just a bit of a rain here and there. Auto is turning out to be the sector of the year. A lot of factors. First, raw material pressures are behind us. SUV sales are doing very well for four-wheelers, which is the high margin business. See, the migration is clearly happening from small car to EVs, which also is great news for for companies, because one side is this migration from EV, but EV in a sense is one space where that because of innovation, battery cost coming down, accessibility, affordability, and the desire for consumer to own EV, they end up paying more. And then you got real revival, which is there in the CV space per se. So Rishi, we lost you there when you said that auto companies are commanding averages above their 5-year average.
Yes. So yeah, first I was talking about the tailwinds from commodity, which is helping the sector. From demand perspective, things are slowing down a little. At least it's not widespread demand recovery which we are seeing. Select pockets continues to outperform SUV segment in passenger vehicle, or a premium segment in motorcycle continues to do well, whereas the entry level cars, economy motorcycle segment continues, demand over there continues to remain weak. Culprit being steep increase in cost of ownership over the last 3 to 4 years. Demand outlook, I think I'll be a little bit, let's say, cautious now going forward. As last year, especially on the passenger vehicle side, there was a lot of pent-up demand, which was there in the sector itself, given there were supply challenges. Now, most of the situation on the supply side is getting resolved. And additionally, my sense is that on the inquiries and the booking levels, momentum is slowing down a little. So on the demand trends, I'll be a little cautious, going forward. But yeah, margin side, as of now, things are looking fine for the sector. But yeah, from that extent, overall, the valuations have jumped up, and I think the risk reward at this juncture is a little bit unfavorable.
Okay, so that was about the entire sector. And yes, as you pointed out, right from an M&M to a Bajaj Auto to a Tata Motors, they've run up anywhere between 25 to 65%. So given this context, Rishi, which are the stocks that you see still have a bit of re-rating trigger going forward? Do you see which is the stock which sees the maximum upside within your coverage?
I like M&M, Mahindra. We still believe that there is valuations scope to further re-rate from where they are. Company has done well over the last 3 years. Their UV segment portfolio has been revamped, and they are the leaders in terms of revenue market share in that segment. Also, there were issues on capital allocation, but with Mr. Anisha taking over as an MD, a lot of corrective actions have been taken, and they continue to improve and be tighter on capital allocation. So, if I look at their multiples, the company is currently trading at 16, 17 times core EPS 2 year forward, which I believe is, there is a scope for multiples to re-rate from where they are, can go till 18 to 20 times. So at least amongst the companies which we cover, I think M&M has still some scope for multiples to re-rate from where they are today, despite the sharp outperformance which the stock price has given over the last 2 to 3 years.
What's the outlook as well when it comes to the new launches that we've seen, the focus on EV? How do you believe that auto companies will be able to leverage this? Are we still a long way off? And which are the companies that you think will be able to really capitalize on the EV opportunity?
Starting with the passenger vehicle segment, EV has picked up, let's say, at a slower pace. The penetration is around 1% currently. Over the coming years, we expect EV penetration to definitely pick up, because in terms of technology, it is the right technology, we believe. And obviously, it's a much superior, the performance of a EV car versus any, let's say, in India today, it's a much superior performance. The only issue right now are the and second is the infrastructure. Multiple OEM, in FY.
Sure. Rishi, apologies, we have you on a bit of a scratchy line, so we'll have to end the conversation a bit short. Thank you so much for making time and speaking with us.